I'm Ladi Williams right here in Lagos. Here's what's coming up in the next 55 minutes. Zimbabwe holds key interest rate at 20% with eye on inflation. And Zambia inflation rate hits a 29-month high and worst drought in decades. Plus, South Africa achieves first primary budget surplus in 15 years. It's great to have you on the show. I'm Ladi Williams. First off, let's kick off with the markets now. Let's see what's happening with metals. We see gold prices steadied today after falling to a two-week low in the previous session while investors await key inflation data. That's coming out that's about Friday. Gold, that's $2,324 per ounce, up about 0.45%. But on the flip side, we'll see other metals in the red at time of checking the markets, $29.23 per ounce. That's for silver. That's down 0.12%. And we see palladium at $915 per ounce. That's about 1.05%. Let's get a check on the oil market now. We see oil prices edged up this afternoon. It was down earlier today, but we're seeing a bounce there, $85.52 a barrel. That's what we have for Brent, up 0.28% from that drop we had in the morning. Price of WTI, the US grade, 0.31% up, $81.14. So we're seeing a bounce right there in the market. It's always demand issues or geopolitical tension moving prices right there in the market, but it's positive this afternoon. To some other stories now, the CBN discontinues the price verification system portal used by importers for foreign exchange. I had a chat earlier with Mr. Bismarck Rwani on the possible risk, and this is what he had to say.
Bureaucratic bottlenecks in a market, the more efficient the price. The reason why you had this reason for over-invoicing was because there was a big difference between the parallel market rate and the official rate. Then it made sense to over-invoice imports and under-invoice exports. Now that there's no fear of that because the difference between the parallel market of 1508 and the official market of 1495 is only 10-15 naira. It's not worth your incentive. There's no incentive in trying to round trip. Therefore, by removing this price verification document, you actually made it easier for people to open LCs and for goods to come into Nigeria. So it's a good move. And what the central bank is saying in so many words is that there's no incentive for arbitrage as long as the price difference between one and the other rate are narrowed. As a matter of fact, we can call this, to all intents and purposes, we can say there's exchange rate unification in Nigeria today. There is one rate because the difference between one and the other is minuscule and marginal. So I think that it's an efficient move. It makes the market more transparent, and as time goes on, you will find that this difference will narrow to almost zero, and that's what we achieved.
Mr. Rwani, believing that as bottlenecks are taken out, that will definitely help to stabilize the FX market at this time. But as I said earlier today, the circulars are rolling in from the CBN, and latest is on remittances are being paid in naira to beneficiaries. But would Nigerians be excited about this? Mr. Ola Oyetayo, co-founder, CEO at Verto, believes it's a good move from the CBN.
I think it's a good development because it allows that CBN should be able to supply liquidity to the market. So sometimes what IMTOs face is they want to sell into Nigeria, but their bank counterparties don't have the liquidity to settle on time. So by CBN also being able to participate as a Naira seller for hard currency from IMTOs, I think is a good development from IMTOs. And beneficiaries of remittance flows, from the research we have done, actually prefer to be paid in local currency mostly because over time, the requirement for and the means in which remittance has been disbursed has become more digital. If you're a beneficiary of a remittance from someone abroad, you would actually prefer if that money gets into your Nigerian bank account in Nigerian naira, so you can use it for whatever you want to use it for, whether it's to pay medical bills, settle domestic outstanding liabilities. If it's in hard currency, it works in a market where you actually need to go into a bank and get cash, or the money comes into your domiciliary account. You have to remember that if you receive it in hard currency, you would still have to convert into Nigerian naira, because obviously Nigeria is not a dollar economy, as we all know. So removing that requirement to convert on behalf of the beneficiary from hard currency to naira is a good thing. So I would say that it's actually not a bad thing to say that you should settle diaspora remittances in the local currency, which is Nigerian naira.
That was Mr. Oyeto earlier. He's the CEO of Govt. So, well, as they say, capital is the lifeblood of a corporation, and as countries and businesses strive to increase capital flow, conversations about mobilizing private capital is more apparent at this time. This informed the decision of the United States Agency for International Development and Chapel Hill Denham to put together a conference on mobilizing private capital to drive investments into sectors that enhance Nigeria's economic and social development. Take a listen.
We must work on exploring opportunities for power infrastructure beyond just the function of the national grid. The renewable energy sector is a fertile ground for innovation and entrepreneurship. When I think about the 70% of this population that's under the age of 24 with high unemployment, it is all of you in this sector, in the private sector, that will ensure and create jobs and opportunities.
For us, infrastructure is a key area of the business that we've developed, but our business is really focused on areas that are accretive to Nigeria's economic development. So we build the business around big themes, from infrastructure to renewable energy, to providing capital, for sectors that have limited access, to capital, and that includes, everything from, gender to, the creative economy, all of these sectors to venture. We're trying to push to see how we can get more institutional capital into them, and this is how we're going to develop this country.
All right, so we'll definitely take a break now. When we come back, we're heading straight to the market. So much to unpack right there on the listed securities and global markets that we track here. That's in a moment. Just stay with us. Welcome back. Now let's head to the markets. We have Willie Bonga with the details. And from a positive close yesterday at intraday. Yeah. Not looking bad.
Not looking bad. The NGX sustaining that bullish sentiment from yesterday, where it saw its first positive close for the week. Gladly, the first one for this week.
Last trading week. For the last trading week
of June, we saw that positive close, and it was sustained at intraday, up strongly at 0.45%, nearly 0.5% there, and 99,828, nearing the 100,000 level.
200
points away from regaining the 100,000 points there. But hopefully, the market sustains this bullish sentiment, and we don't see that, reversal in the trend. And it's, we don't need any reversal at the moment.
I'm looking forward to the monthly close at this point. Is it going to be able to stay above 100,000? I guess the bets are on at this time.
Of course, definitely. Let's look at other markets. We saw mostly positive sentiments there, but South Africa, however, was in the red, 0.59% down, 78,000 points. It's still looking good there, but we've got some market news right now. Nigeria's still talking about Nigeria's NGX. We see Femi Otedola, the billionaire businessman, has acquired additional shares in FBN Holdings. That's valued at 183 million naira. Now, this fresh acquisition was disclosed on Wednesday in a corporate filing on the NGX, and development comes 2 days after it bought over 797 million shares. That's a big one for Otedola, is moving in on FBN Holdings shares, not letting that stock breathe there. And looking at, we talked about South Africa. Now let's see how the EGX 30 did at intraday. We see that it was up over 1%, now at 27,783 points, and the Kenyans closed Wednesday session in the red. Let's check in on activities now at the NASD market and see how they fared. We've been talking about the unlisted. We're talking about the unlisted securities exchange right now, the NASD, and joining us is Davina Adeni, Chief Executive Officer, Bestwood Asset and Trust Limited. Good afternoon, ma'am. It's good to have you on the program. Let's begin with last week's performance at the NASD. We've been seeing the over-the-counter, that's the OTC Securities Exchange, closed on a negative note week on week, 1.32% down. We know it was a holiday shortened week, but this week it's been shaky as well, particularly on Tuesday. The index was down more than 2%, that's 2.38% to be precise. But we saw that bounce back yesterday. What has influenced this poor performance? Is it just profit taking? Hello, Ma, could you unmute your mic? I can't hear you. Okay, I think we've lost Ms. Davina Adeni there. So let's just move on now to see what was happening in the Middle East markets. We've seen Abu Dhabi index up 0.3%. We've seen majorly positive sentiment also in the Gulf there, but Dubai is down 0.24%. Now, still within the region, Saudi is up 0.64%. Let's look at that very quickly. And Qatar leading the gains in that region with a 0.92% gain. Very strong movement for that index. Now, let's look at the U.S. and see how the futures market fared in early trade today after the S&P 500 rose for a second day. Now, the S&P 500 futures is down 0.14%. Same for the NASDAQ. Same level, 0.14%. And we see the Dow Jones Industrial Average falling 0.17%. Now, Micron shares slipped 5% in extended trading after the chip maker issued the fourth quarter revenue guidance in line with estimates. Now, even as the company beats third quarter expectations, Levi Strauss, looking at the fashion industry, we're seeing that one drop 12% after the jeans maker latest quarterly revenue also disappointed investors. Now, bank stocks were in focus after the Federal Reserve said Wednesday that the biggest U.S. firms are able to withstand a severe recession scenario. Goldman Sachs, the shares slid 1.7%, while JP Morgan Chase shares rose slightly. Now, corporate earnings continue today with releases from Walgreens, Boots, Alliance, and Nike. Well, let's circle back to the NASD or listed equities market. I think Mrs. Adeni is back. She's going to give us what's going on in that segment. Mrs. Adeni, I was talking about the drop in the NASD market. We've seen the market has been performing not so great. We saw that 2.38% drop on Tuesday. We know that last week it was a holiday shortened week. We saw week on week that drop as well. What has influenced or what is driving this poor performance on the NASD, despite the fact that it bounced back yesterday?
Yeah, thank you very much, Will. Well, some of the negative sentiment that might be making some of the aspects, some of the companies quoted fade away are majorly monetary, in the sense that we've noticed that at the beginning of this regime, we actually inherited a challenging economic situation. And then you find a situation where there was a fuel subsidy pronouncement by the Tinubu regime, and then there was pressure on the Naira. Remember that the CBN could not remit dollar foreign airlines at some point. And then we find a situation where generally there appeared to have been a gloomy situation around, the economy. And in an attempt to drive economic development and the growth, the CBN then adopted a free floating policy for Naira against international currencies as at June 14th, 2023. That was last year. And then the aim was to let the market forces determine, naturally, forces of demand and supply of foreign currency determine the naira value. This resulted in like a substantial devaluation of our currency, and then with significant negative implications of the Nigerian economy. You would notice that in the parallel market, there was a devaluation, and that the naira at some point in time fell all the way from 754 naira to about 1,408 naira as against $1. That's about 86% depreciation in the value of our currency. And of course, we notice that in the official market, devaluation fell from like about 770 to about 1,417 naira as against the dollar. That's about 84% devaluation. So you now have a situation where, you find a lot of investors, having this reluctant apathy towards investment because of this upside fluctuation up and down of our currency. So no doubt that has had a negative sentiment on the appetite to invest in the equity.
Okay, and this is not as a result of companies performing poorly, especially the bellwether stocks.
Yeah. So basically, you find some of the stocks listed, like in the NSD, for example. You take a stock. Let's just do a rundown of the major stocks that are trading. You have stocks like CSCS, stocks like UBM Properties, stocks like NESD, and then the WAMCO. So in recent times, two of the companies that are majorly active on the NESD, like the CSCS and Aradel, you notice a situation where they had just recently paid some attractive dividends. So you find a situation where the price will naturally, regain its position from CUMD to XD price to stabilize. It will go down for a bit. And then you find a situation where it has become stable now. Now, haven't dropped after the dividends were paid. Aradel paid as much as 170 naira per unit. So it was adjusted from about 3,200 naira to start up again on a stable rate at about 3,112 naira after CUMD. And then you find a situation where, of course, SCSCS also paid, and then they adjusted from about 21 naira to about 19 naira 50 kobo. So at this point in time, having done that, investors would now begin to look into the books again to find a way of readjusting and re-entering the market at a much lower rate. But I would notice today on the trades for today that there's a lot of activity on UBM Properties. We all know that our investors have a very strong appetite for penny stocks. UBM Properties is a stock that is going for just about 1 naira 81 kobo. So, of course, what do you expect? You expect investors to flood there, particularly when there is hope that, with all of these new bank policies that, try to encourage them to list, to raise funds. It's very low for UBM Properties, and I think they have space for both being a penny stock. That doesn't, make us forget the fact that Aradel again has bounced back. The transactions today are looking bullish. There's a lot of energy there. You find up to about 100,000 units on bid, investors trying to buy, and we have only 10,000 investors trying to sell. So that shows that even at the rate of 5,200, it has a potential to end up on a higher note today.
So how do you see the market closing today, since you're saying that Aradel Holdings, which is in the oil and gas sector, is very bullish, doing so well, and UBM Properties also doing so well, investors are eyeing those stocks. How do you expect the market to close, and what's your outlook for next week?
Well, it's going to definitely close at a much higher, at the maximum today, from what I can see from the side of the supply and sale. So it's going to end up on a very, very positive note today. Right.
Thank you so much. Thank you so much, Ms. Davina Adeniyi, CEO, Bestward Assets and Trust Limited, for sharing your insights on Business Incorporated.
Thank you for having me.
So So let's look at the Asian markets now, which fell on Thursday. It's red for that region. The Japanese yen weakened to a near 38-year low late on Wednesday, hitting 160.82 against the dollar, and that makes the dollar also hit a 38-year high, according to FactSet data. Now, Japan's Nikkei 225 fell 0.82% to 39,341 points. We see Kospi in South Korea closing down 0.29%, and the Hang Seng index in China led losses in that region. It was down 2.06%. That's a massive drop for that region to a near 2-month low in its final hour of trade. Now, mainland China's Shanghai closed 0.9% down as well, and back-to-back hit for that region, not a breather, nearing a 4-month low. Australia's ASX, S&P 200 paired losses earlier, but it still ended 0.3% down for that region. So I was just looking at all these happenings, especially Asia, and surprised that, a lot is happening, especially when they're looking to US and looking into what's happening with NVIDIA. We saw that rally for NVIDIA stocks after it slumped, the back-to-back sell-offs, and investors were bullish on it, buying it and popping that index, that stock price back up. But we're now seeing prices coming down for, this in this market, especially investors that have been eyeing inflation data in Australia and looking to what direction they were going to put their money. I think they're being disappointed as to the decisions by the central banks.
They're not getting their way, at this point. The central bankers are still kicking the ball forward, this year. So who knows? We might not even get that cut in 2024.
Because
I think investors should just come to peace with that at some point.
Yeah, especially we're seeing that in Africa, inflation is ticking back up for some, African countries, and you're going to be mentioning that later. But it's just, we're wondering, you always ask, where do we get the soft landing? Where does this all peak? When
soft
does it all end?
Or no landing?
Or no landing.
We'll definitely find out. Thank you so much, Will, for the details right there. Most of the markets we track in the global space. But let's take it on to London now. We have Juliana join us from our London studio. Great to have you, Juliana. So we see British tech star, that's Ultraleap. They're to halve their workforce, and that's another breakup plan at this point. I guess it's all about the job cuts at this point.
Actually, about Ultraleap. It may not be a name that's familiar with most of our viewers, but it is an incredibly important British tech startup, as you've described. I think it's been going for about 5 years, and basically what the firm does, it kind of removes the barriers between digital and physical. So if you're into AR or VR or AI, this is very much that type of company. In fact, I think a lot of people have compared it to like Minority Report, which was a film starring Tom Cruise. But anyway, they've released this statement this morning. It was a memo, actually, that was released to staff members, but a British broadcaster has picked up that leaked info and reported it to the press, where basically what they've told people working in certain divisions across the company is that they're going to be losing their jobs. Now, we don't have any further details about why this is going to take place, but I suppose all you have to do is really look at the labour shape-up of tech across the world. We've seen layoffs from Meta. Meta, of course, the owner of Instagram, Facebook, and WhatsApp. They've laid off tens of thousands of staff. We've also seen something similar with X, formerly known as Twitter. So this does appear to be the trajectory of a lot of tech startups, particularly those that rely so heavily on AI, because we know that artificial intelligence is very swiftly removing middle jobs. So if there's anything that ChatGPT can do, the chances are you won't have your job at the end of the year. So really worrying, but particularly for the UK, of course, because we are going through quite a testing period of the economy, and it's really important that our own startups manage to thrive and survive in a very competitive tech market. But according to that leaked internal document from Ultraleap, the staff working at that tech startup won't be having their jobs for very long.
Right, and I'm wondering, Juliana, when AI is going to come for our jobs. We'll definitely see for sure. But I would see the clothing.
Well, the AI wouldn't be smiling and doing these ad libs that we're doing.
I know.
So perhaps let's just keep doing this. Let's keep talking.
AI might be quite stiff, But let's see. Well, we'll see H&M. I've seen their shares.
Like stiff.
We've seen their shares plunge about 13% on doubt over their full-year margin target. We know how the markets like the forward guidance and forecast at this time. How are you seeing that?
Yeah, absolutely. It's a really interesting story. Hennes & Mauritz, otherwise known as H&M, I think it is the second most popular fashion brand around the world. It is, of course, Swedish, but you can get it you can find a H&M store in most major cities. And, they're struggling. And this is despite the fact that in their trading update to the end of May, they have reported bumper profits, but it's the forecast, as you were quite rightly saying, that's kind of spooked investors, because they don't think, bosses at H&M think that they're going to have a successful June. Lots of this has got to do with the weather and supply chains, but I also think this paints a picture, Laddie, of just the wider market around clothing. In the past couple of years, we've seen so many very, very, very cheap online fast fashion brands. It started off with the likes of Boohoo and Pretty Little Thing, very popular in the UK. But now you've got Chinese firms such as Temu and Shein coming in, literally selling clothes for like 99 pence. It's very difficult for certain brands like H&M selling a T-shirt for $9.99, and then you've got somebody selling very similar clothes for 99 cents. That's kind of the issue that H&M and other established fashion retailers are having. So, a lot of people are looking at this slump in stocks and seeing, is this a sign of things to come? Are kind of middle range of fashion retailers going to be able to survive at a time where a lot of people want very cheap clothes? In fact, Amazon today have just announced that they are going to be selling much cheaper, they're going to introduce a much cheaper discounted store. It is already very cheap to purchase off Amazon for some products, but they're going much cheaper because they want to be able to survive in a very swiftly evolving market. So yeah, H&M, their shares down in Sweden today.
Right, with the cost of living crisis, we definitely need cheaper clothes at this point. But how's all of this impacting
Speak
the
for
market?
yourself.
I like cheap clothes.
Yeah.
Well, they have to look nice.
They do. You always look great, Laddie. The FTSE all shares down. We're a couple of days left of campaigning for the UK general election. We've got the Tory betting scandal that now involves the police. But also we have some really interesting data which markets have picked up on. And that is the fact that, according to the latest polls, as we have the two-party system here of, the Conservatives and the opposition Labour Party, there are suggestions that perhaps what we're going to see in a week's time is the Labour Party being the party, the government, and the opposition being the Liberal Democrats. That is huge, especially because we know the Liberal Democrats were the one party that were voting for Britain to get back into the EU, which is why they lost so drastically during the 2019 elections. Anyway, I don't want to get politics involved in this conversation. However, that is having a ripple effect onto the markets. So let's have a look at those numbers. The all share is down. It's down 0.20% at intraday, Laddie. The FTSE 100 down to at 0.23%. And the FTSE 250, the domestic market, that's down at intraday by 0.02%. In the currencies market, the British pound is currently trading up against the US dollar by 0.25%, up against the euro 2 by 0.06%, and up against the Japanese yen by 0.02%, Laddie.
Right, definitely. With over half the world heading to the polls at this time, definitely markets are going to feel the impact. Always great talking to you, Juliana. Thank you so much for the update.
Always great. Bye-bye. Thanks, Laddie.
All right, now let's take it on to Europe now. At an EU summit, the bloc's 27-member country are expected to sign an agreement on security guarantees for Ukraine. Join us now with more. That is DW correspondent Chibona Chimbelu in Berlin. Great to have you, Chip. So how significant is this agreement?
Thanks for having me. Well, Ladi, this agreement is supposed to strengthen EU support for Ukraine for the future. The bloc plans to continue financing weapons deliveries for Ukraine, keep training Kyiv soldiers, and to step up efforts to bolster Ukraine's defense industry. Now, that is according to news agency AFP, which cited a draft agreement. Apparently, there are no concrete commitments of new aid. For much of the war, U.S. military aid for Ukraine has outpaced the EU's, and it has not been an easy job getting every one of the bloc's 27 member states on board. In fact, just this week, the EU had to come up with a legal loophole to bypass Hungary's veto on buying arms for Ukraine. Hungary is considered the most pro-Russia EU country, and it has been against providing military aid to Ukraine. But on Monday, Brussels came up with a legal loophole to grant 1.4 billion euros of profits generated from Russia's frozen assets in the EU to Kyiv. The funds will be used for buying weapons.
And what is the EU doing to put pressure on Russia?
Well, the EU adopted a 14th package of sanctions this week. The new restrictions target Russian gas exports for the first time, and so that is an attempt by Brussels to reduce Russia's revenues from liquefied natural gas, LNG exports. The bloc is also banning further onward shipments of Russian gas from EU ports, and it is prohibiting future investments and exports to LNG projects that are in Russia. Apart from that, the newest restrictions aim to close loopholes that allow the Kremlin to circumvent the sanctions. So the EU is further limiting Russia's ability to access restricted goods and technology. And Brussels has also introduced measures to ensure that private sector companies comply. Now, that also includes keeping foreign subsidiaries of EU firms in check. In recent years, the exports of some European technological goods and other products have made it to Russia via intermediaries based in other countries. Finally, more individuals and entities have been added to the 14th sanctions package. Russia has been the world's most sanctioned country since early 2022.
Yeah, heavily sanctioned at this time. But what can we expect from the markets in Europe today?
Well, Ladi, European stocks are expected to trade lower today amid market jitters ahead of the first round of France's parliamentary election on Sunday. Traders are also cautious as they await U.S. inflation data to be released today. Now, that could provide some clues about when the U.S. central bank will start cutting rates. Here in Europe, investors will be also on the lookout for Turkey's interest rate decision. And in terms of data, Eurozone economic confidence and the Bank of England's financial stability report are due. Now, the stock in focus for markets is Nike. The world's biggest maker of sports apparel will present its fourth quarter earnings for 2024. Nike's dominance of the industry has been declining amid more competition.
All right, thank you so much, Chipona Jibeli, with details right there in Europe. Thank you. All right, now let's take it on to East Africa now. We see Kenya, the fastest growing economy in Africa, suffered a setback there with protests that claimed the lives of people with a big standoff between the government in Kenya and the youths of Kenyans on the finance bill. Let's hear what President William Ruto had to say yesterday.
And listening keenly to the people of Kenya, who have said loudly that they want nothing to do with this Finance Bill 2024, I concede, and therefore I will not sign the 2024 Finance Bill, and it shall subsequently be withdrawn, and I have agreed with these members that becomes our collective position.
All right, let's bring in Wachira Kariuki now, finance consultant in Kenya. Great to have you, Wachira.
Very well, Ladi. It's such a pleasure to be here to discuss East African markets and Kenya in particular. Thank you very much for having me.
Thank you for coming out. So I see Kenyan youth spoke with one voice against the bill, but sadly, people had to die for this.
Yes, the youth came, we call them the Gen Z. They have been able to rally around Twitter, Facebook, and social media. They've been able to pretty much coordinate and communicate among themselves. So they turned out in very large numbers. And unfortunately, some of them passed on, but they were able to pass a very clear message on the way, their path, their interests, and their needs, and they've been had to be listened to by the government. It's quite unfortunate. So we think that all things considered, that it's a time of a change for the country in Kenya in particular, and we are hopeful that we shall keep on getting better and more changes as we go forward, irrespective of the 13 people who passed on. Ladi, thank you.
And we know Kenya owes about $80 billion and is desperate for cash at this point. And raising taxes, that option seems to be off the table at this time. What other options are there? Can the government cut spending at this point?
Yes, for sure, Ladi. The government has cut spending quite a bit. There have been a bit of recommendations. There has been a consistent insistence that government spending changes. There's a lot of recurrent expenditure and, of course, a lot of corruption and a lot of wasted money. So the citizens made it clear that that bill just requires the Kenyan citizens and the government at large to restructure their consumption and expenditure, avoid taking unnecessary debts, and, of course, make sure that the budget makes sense. Because as we speak, some of the things that really angered the youth was that the wife to the president has a $1 billion budget. The wife to the vice president has I think, $1.6 billion budget. So this small unnecessary costing is what the Kenyan Republic is completely unhappy with. And they are saying it's time to change, and they are pushing the agenda, and they've finally been heard. So there are very clear ways and means of cutting expenditure as a country. But there had to be motivation to the elite and the governing class for them to do the right thing. And I think finally they have done that, and they will. By withdrawing the bill.
And I believe the IMF actually recommended this tax bill. I guess the IMF didn't see this coming. And do you think other recommendations should be considered at this time?
Correct, yes. The IMF underestimated the reply and the acceptance of this bill by the public. But I'm happy to say that the public has come out very clearly. There's a specific generation of people who have not participated in governance matters. There's a category of individuals in the country who have not participated regarding corporate governance and, of course, measures and policy making. They have not been included, but now they have. And so the IMF did not counter or expect that, and I suspect they have to go back to the drawing board, which they didn't expect the reaction, but they've always insisted on those measures being taken. So I think now the government is finally able to listen, although there's speculation that some of these problems are actually caused by IMF. But we want to see if the bill is, at least with the bill being dropped, we can now reassess the situation, and the government is forced to readdress the problem in a more strategic and intelligent manner that leaves all of us better. Remember, this is a growing class of people who are below 30, so the next 10 years of governance are going to affect them more than anybody else. So it's important and necessary to do what they think is best and find a middle ground between what government is trying to do and what is good for the citizens of the country at large, Ladi. Thank you.
I guess the Gen Zs are fighting for themselves at this point, but help us quantify the impact of the protests on the Kenyan economy.
Very well. Good question, Ladi. So as at yesterday, unfortunately, our Eurobond, which is the first of its kind, has been downgraded, right, by the Moods, by the Moody. So what happens is that it means they think our debt as a country is a bit more risky. It simply means there's political risk that is attached to the bond. Remember, Eurobond is Kenya borrowing money in dollars from the public and by extension the diaspora. Right, so it has been downgraded, which means it's a lot more risky. So a government, an entity, a corporate, a government trading that particular bond and holding it simply means that there is a small chance that it's a bit of a problematic bond to hold. But we hope that the stability that came literally the following day is going to stabilize, and maybe we can be reinstated to where we were. Moody's and Poor is a company that rates bonds worldwide, and so they downgraded us yesterday morning in light of what was happening, and the dollar also slightly lost from 127 to around 129 as of today. But in light of the robust measures and the political stability we have had because the military kicked in, and of course there are now conversations between different political parties. The president, of course, is very willing, and of course the protests today have whittled down a little bit, and there is not as much anticipation and heat, so to speak, and there's a bit more stability, especially in counties around Nairobi, because this was 35 counties that participated in this particular crisis. So there's a bit more consolidation, and we think economically speaking, things will be fine. However, there was a bit of transition with a number of Kenyans traveling out of the country. The airport was gridlocked quite a bit. Flights were taking off quite fast because there are a lot of people who are buying tickets to leave the country. Of course, especially foreigners, they didn't really know how long this would take. They didn't know the effect of it, and especially because the president was a bit hasty in calling in the military. So there was a bit of concern regarding us turning into a military state and us going into a crisis, so to speak. So foreigners, not understanding the depth of the problem or how quickly it would be, chose to exit. The shilling has suffered. Our bonds have been downgraded and suffered a little bit, but we think it was just momentary, and the country at large is still fine and we're going to stabilize and go on fine, so to speak. I'm saying that because we are starting the half year in next week. We're starting in July, which is 6 months into the year. So we are hoping that it does not affect the half-year operations of most investment banks, commercial banks, manufacturers, exporters, importers. And we think this was a one-off thing, which was fueled by the Gen Zs. But now there's a bit more stability going forward. It's not a political year. We're not in elections. So it's a bubble. It was an unfortunate problem, but it has been handled quantitatively. And I think the political class did the right thing in the president calling all the citizens and addressing them in his capacity as a president to bring peace and stability and an assurance that all will be well going forward, Ladi.
And we definitely hope for more peace and stability right there in Kenya. Thank you so much. Wachira Kiruki is a finance consultant right there in Kenya.
Always a pleasure, Ladi. Thank you.
All right, let's get a check on all the stories. Now we see Zimbabwe has left its benchmark interest rate unchanged, even as it sees inflationary pressures easing for the rest of the year under its bullion-backed currency. The Central Bank Monetary Policy Committee kept the rate at 20%, according to Governor John. Governor John, he said that this move definitely keeps the economy stable at this time. And Zambia's annual inflation rate jumped to a 29-month high in June as the southern African nation continues battling the effects of an El Nino-induced drought, the worst in almost 6 decades. Consumer prices rose 15.2% compared with 14.7% in May, driven by a higher cost of cornmeal, cereals, and spirits in the country. And South Africa has achieved a surplus, the first one in 15 years, as it took a stern approach to funding state-owned companies that have drained government finances. Well, Africa's most industrialized economy posted a primary surplus when revenue exceeds non-interest expenditure, about 31.6 billion rands, about 0.4% of the GDP in the year. And Chinese ambassador in South Africa, Wu Peng, has emphasized the importance of building sustainable and mutually beneficial relationships. Peng highlighted the potential for South African companies to leverage China's vast market and for Chinese companies to invest in South Africa's diverse economic landscape. Made his remarks in the Beijing South Africa Business Corporation Promotion Conference in Johannesburg.
The discussions are centered around growing economic partnership between China and South Africa. The ambassador of the Republic of the People of China in South Africa, Wu Peng, says the conference aimed to enhance bilateral trade and investment opportunities.
China and South Africa are called to the same goal on development and security, international order, and the global governance. We understand and support each other as always.
Meanwhile, Premier of Gauteng, Panyaza Lesufi, says this should not only be a talk shop.
We come here with one message and one message only. Let's make this relationship a reality. We come here with one message and one message only. Time of talk, it's over. It's time of action, so that we...
Now let's head to the commodities market. Now, a still report by the National Bureau of Statistics says that the average retail price for refilling a 5 kg cylinder of liquefied petroleum gas in Nigeria has increased by 70%. That's a year-on-year big jump there, with varying prices across states in Nigeria. Joining me now is Teva Kumeka, Research Manager at Financial Derivatives Company. Great to have you, Teva. So can you give us a sense of what is happening to this market and the possible drivers of this trend we observe with the price of LPG in Nigeria?
Good afternoon, Ladi. Thank you for having me. Yeah, and the petroleum market industry is a very dynamic and very volatile market. But over the time, what we observe are factors pushing the prices of LPG in the market, both domestic and global. On the domestic line, we notice that there is domestic supply issue. So we are having inadequate local production, and which leads to reliance on importation. Then importing, there's issue of exchange rate depreciation. So exchange rate depreciation has a spillover effect, which has a pass-through into the economy. Then we have global energy prices. The crude oil price has been very volatile, which has hovered around $80 to $90 since the beginning of this year. The other issue we have is infrastructure challenges. We have challenges of storing these products, then transporting them to the end users. So these factors are the ones driving the price of LPG in Nigeria. This increase in LPG has effect on consumers. It has issues of increasing cost of living. We know recently we're battling with the issue of cost of living crisis, and cooking gas, also known as LPG, has a weight of 2% in the consumer basket. So an increase in the price of cooking gas will obviously have an effect on consumers' living standard. We're also battling in this part of the world. We have issues about energy poverty. We're already suffering with that. So with the increase in price of LPG, if this is not contained or nipped in the bud, we're going to have issues with energy poverty. We will see households reverting back to their traditional way of cooking, which include the use of firewood and charcoal, and this has implication on the environment. It has polluting issues that affect environment. On business, small businesses will also be affected because their operating costs will be higher than which will factor into their end product, what they give to their customers.
All right, well, we definitely don't want to go back to the dirty alternatives at this point, but very quickly before I let you go, is there any chance, or what do you think could help Nigerians get affordable LPG? We're looking for affordable everything, at this point, but talk to me about cooking gas. What are the prospects of getting affordable cooking gas?
Yeah, in 2017, Nigeria brought in what we call the National Gas Policy, which that document is a very fantastic document. If you go through it, you will see. But it's not the issue of having a good policy. What are the processes of implementing and achieving what has been written down in black and white? The policy is majorly to reduce CO2 emission because LPG has a lower pollutant materials compared to other fuel, such as petrol and diesel. So the policy was to reduce CO2 emission, then optimize energy production in terms of expanding energy projects, expanding exports and domestic use, balancing what do we need to export and how much do we need to use. Then reducing gas flaring. If you go to the Niger Delta where crude oil is being exploited and extracted, you see a lot of gas flaring. So this beautiful document, those promises are there, but what efforts are we making as a country to implement and have a sustainable or an affordable source of energy?
All right, Teva, so much to unpack there, but hopefully we can get some affordable prices at some point. Thanks so much, Teva Kumeka, Research Manager at Financial Derivatives Company. Thank you so much.
Thank you very much for having me.
All right, now let's head straight to the markets now. Definitely, we're still seeing pullbacks right there in the crypto market with Bitcoin. The sell-off still continuing at this point, 61,000. That's what I have for Bitcoin. Ethereum holding up at $3,426. On the flip side, Ethereum's looking much better. And we see Binance Coin there on chain. Solana not looking so bad at this point. Let's look at the sentiment in the market now. We know it's still around that neutral spot at this time. The investors don't know which direction to go, and that's in the crypto market. But looking at the top cryptocurrencies we track, we see XRP down 0.60% at 46 cents, and we see the racks of Binance Coin, $572, quite unchanged at this time. Let's talk to Gilbert Jokpato now, financial market analyst. Hello, Gilbert.
Yeah, greetings, Mrs. Ladi.
Yeah, great to have you. Great to have you, Gilbert. So we're still seeing a lot of volatility right now in the market, but there's reports about the Ethereum supply at this point inflating. And I thought, with that past update, Ethereum should be deflationary at this point, but we're seeing inflation with the supply. Help us understand this.
Okay, the Ethereum inflation problem comes as a surprise, because we're all expecting that the Ethereum merge will become deflationary. But surprisingly, over the past 2 months, we have been facing, this rise of inflation, which is as a result of actually the Ethereum Dencon upgrade. So what happens is that the Ethereum Dencon upgrade happens to be a trade-off of cheaper transaction costs for inflation. This was not something I think the developers, did foresee. But over this past month, we've had over 112,000, over 100,012, Ethereum been added into the overall supply. But recently, Ethereum has a more twist of fate between the coming ETF, which is on the sidelines, and rumors has it that on the 6th of next month, it will be due for approval. Okay. So we just need to have a watch of the potential of the Ethereum, the Ethereum ETF, as well see its intertwined relationship is going to have with the inflation problems, which we are experiencing.
All right, Debbie, before I let you go, very quickly now, we're expecting some data still out this week. Any headwinds for Bitcoin at this point?
Oh, okay. We have to look out for the inflation numbers that will be out because presently we are seeing dollar strength, and the present dollar strength is causing Bitcoin to go back into its present range. So outcome of the inflation numbers, if it reflects in a lesser, if it results in the dollar weakening, then it will be a more positive news for Bitcoin.
All right, definitely be watching out for that. Thank you so much, Gilbert Jogwata, financial market analyst. Thank you.
Yeah, thanks for having me.
All right, that's the show today. Thanks so much for watching. You can visit channelcv.com for more updates. You can also watch us again on our YouTube channel. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.